Hello Wolfpack, I want to talk about the massive amount of FUD that's going on in the cryptocurrency market right now. I'm seeing left, right and center 3K price predictions on Bitcoin for various reasons. And I'm also seeing it be reflected in the charts a little bit. And look, yes, I understand that the macro is not good. The macro doesn't look good. We had inflation come in higher than expected. For example, when interest rates, the chances of a 75 basis point have gone up to 97%. They were previously 28% just a few weeks ago. And so something like that, I don't know, maybe 60%. But the point is, the macro was expected to look a lot better than it does right now. If you go back a month ago, people were expecting it to look a lot better, and obviously it's not got to that point yet. And so people are getting very, very bearish. I think for someone who doesn't necessarily understand the way the markets work, that is a logical position to take. But for someone who does understand the way the markets work, they understand that the S&P 500 is directly affected by the macro situation. Bitcoin is a little less affected in the macro situation. You might think, well, how can you say that, Wolf, seeing as we've gone down so far in the last, a year or so, or less than a year, because of the macro? And I'd say it's not because of the macro. I'd say it's actually due to the 4-year cycle theory, and the 4-year cycle theory has taken the lead on them. Look, we've covered this in the past too many times, but I do want to look into something new, right? And that is the Bitcoin dominance chart. And some people immediately discount this chart every time they see it because they think, oh, well, Bitcoin dominance chart's not relevant anymore because back here, if we look at like 2018, stable coins weren't really a thing. Now stable coins are a thing, therefore it's thrown off the chart because obviously now money in stable coins kind of looks like money in altcoins, and so it's thrown off the chart a little bit. Obviously stable coins are massive things now. So I understand that, but you still can get an idea of where this chart is going based on the trends, right? Regardless of whether stable coins are distorting the data or not. The fact of the matter is the trends, the way the prices move, the way the percentage moves on this chart still gives you a good idea of what's going on. So this is where we get into the video topic here. If we're looking at 2018, let's go back to 2018. We'll look at the bull market, the last bull market, 2017, 2018, not the last one, the one before. And we can see that when we topped out, right? When we topped out in the bull market on Ethereum, altcoins, Bitcoin, that was in January. That was right here. We bottomed out on the same week that we topped out in the market. So we bottomed out on Bitcoin dominance in the same week that we topped out in the market for Bitcoin, Ethereum, and altcoins, etc. Meaning that as soon as the top was in, as soon as that happened, from that point forward, which was the bear market, money was shifting into Bitcoin and away from altcoins. More people, which translated into English, means more people were more comfortable holding Bitcoin than they were altcoins. They were selling their altcoins at a faster rate than they were selling Bitcoin, and potentially they were accumulating Bitcoin. So we had the top was in January, and from the top being in all the way through to around the halving, just before the halving, around 10 months before the halving, we saw an uptrend, meaning that whole period of time, people were accumulating Bitcoin over altcoins. They weren't interested in altcoins on a general basis. They were interested in Bitcoin, okay? That started almost immediately. Now, if we look at this bull market, we can see something a little bit different. And this is regardless of the strength of stablecoins, right? Because stablecoins have been around now, so it doesn't really matter anymore. Okay, so we saw the Bitcoin top in November, okay? And unlike 2017, we didn't see the sudden shift on the Bitcoin dominance chart. We didn't see Bitcoin dominance skyrocket. In fact, we've seen Bitcoin dominance go sideways, right? Nothing has happened to the Bitcoin dominance. What does this say? What does this tell us? It tells us this. It tells us that in this bull market, unlike the last bull market, people are much less comfortable shifting their money into Bitcoin, right? They're not more comfortable in shifting into altcoins either. It's just kind of neutral both ways, because if they were more comfortable shifting money into altcoins, it would be going down. If they're more comfortable shifting money into Bitcoins, it would be going up. But it's just going sideways. It's like there's no effect. It's like people aren't really, they're undecided. They just do Bitcoin and altcoins. There's no general market consensus over which coin Bitcoin or altcoins is better to accumulate here. You'd think that based on previous trends and based on logic, that people would seek a lower volatility asset during this period of time, an asset with more security, which would be Bitcoin, of course, over altcoins. But that simply isn't the case. We're going sideways here, right? People aren't choosing Bitcoin over altcoins. They're just kind of not really doing anything. They're just choosing either or both. There's no distinguishable trend other than sideways here on Bitcoin dominance, which is dramatically different to what happened last cycle. So now we have to ask the question. It's like, well, why aren't people, it's not that they're not confident in Bitcoin, because if they were not confident in Bitcoin, it'd go down. But it's that they're not seeing Bitcoin on a general basis as the more secure asset, to hold money in. They're kind of trusting altcoins a little bit more than they did in the last bear market, as per what the data suggests here. Why is that the case? I'm going to tell you why it's the case right now. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Mega Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. Posts like this. Crypto Savvy did a post here, 15th of October, which is of course today. Amazon.com bubble pop. Okay, he's comparing, and this is not just Crypto Savvy. Okay, lots of people. I am not targeting Crypto Savvy by any means, but lots of people are posting the same thing about the Amazon.com bubble. In fact, even Mega Crypto was posting this. He was one of the first people to find this fractal, by the way, and he wasn't calling for 3K, but he was just showing how the fractal looked. Now, I have a big problem with this fractal. First of all, fractals are extremely unreliable. They barely ever play out perfectly. And second of all, how can you possibly compare Amazon in the year 2000 to Bitcoin in the year 2022? There is nothing similar about either of these things. Just because the price looks slightly similar, it doesn't mean anything. Even if you're looking at this chart right now, it's so zoomed out that you can't even see whether the price looks similar, right? This is a natural market pattern. The reason why these natural market patterns play out over time is because of TA. It's not because they're doing the same thing as the other thing. It doesn't mean it's going to go down to 3K. Okay, that's just in my opinion, that's just very simple. But the fact of the matter is, a lot of people don't understand market dynamics. They don't understand coin supplies and coin circulation and all that kind of stuff, tokenomics and etc. They don't understand how that stuff works, and so they think it's possible for Bitcoin to go this low. When in reality, it's possible, but it's basically not. Okay, mathematically speaking, I spoke about this before. The floor price of Bitcoin is around 2,000, just based on the amount of Bitcoin that's been lost or suspected to be lost that can't be accessed anymore. So that means that the lowest Bitcoin can go is already significantly higher than 3,000 if you're thinking about some people who would just hold regardless. Okay, so let's just get this 3K prediction out of the air here. It's not logical. I don't need to spend 15 minutes dissecting it. I really could, and it would be very simple. But the fact of the matter is, if you need me to do that, you probably need to get a better understanding of technical analysis before you start calling for 3K. All right, I think it's completely ridiculous. And I think basing a fractal, it's a fractal, guys. Come on, how much major support do we have before 3K? We have so much major support. If you think we're going to 3K, first of all, it'd probably take years on end. And second of all, Bitcoin would not recover. It would be dead. There would be no chance of recovery after a 3K Bitcoin. I can tell you that right now. But what I will say is this. Predictions like this, okay, and the macro situation, the recession, and all the stuff going on in Ukraine and Taiwan and all these things, and Joe Biden in there, and the election coming up and all this, it's driving people crazy to a certain extent, okay? And they're really losing faith in the markets, and we've seen this happen all over the place. The S&P 500 is testing its 200-week SMA, which is a line that it hasn't lost for years, like a long time, aside from the brief COVID drop. This has not been lost since, let's go back and see. It hasn't been lost since literally the 2008 financial crisis, right? It's on the brink of losing something that it hasn't lost since the 2008 financial crisis, right? This is major stuff. Inflation's higher than expected. Macro's not going too well. Basically every single analyst, quote unquote, who definitely wasn't paid off by the government, who predicted things regarding inflation for the last 2 years have been incorrect and inflation has skyrocketed. There's stuff going on that people, especially people who don't do markets as a full-time job, just simply don't understand, and it's causing a massive amount of fear and irrationalities in people's movements. This is why we're not seeing Bitcoin on Bitcoin dominance go up like it did in the last bull market, because, by all means here in terms of price action, this bull market is completely normal, but when you're looking into it at an intricate level, it's getting a little bit complicated. And people aren't doing what seems to be rational based on historical data, okay? Because they're looking at the historical data, and they're looking at things like the 200-week SMA on Bitcoin. They're seeing that's been lost. They're looking on things like the let's go ahead and draw it up here. I don't know if I'm going to be able to draw it perfectly. I can't remember exactly. But they're looking at things like, for example, this trend line. I could draw it better. I can't remember where it's exactly stemming from. But that's a trend line that lasted all the way from like 2009 or something. Not 2009, like 2011 on Bitcoin. 10-year trend line that's been lost. They're looking at that and they're saying, oh, look, all these things are being invalidated. All the things that previously called the bottom are being invalidated. This is not normal. Therefore, I'm not going to act rationally. The fact of the matter is, guys, I want you to be very clear on this. The fact of the matter is, this is normal. The price action we're seeing is completely normal. We topped out as per the 4-year cycle in November, not as per the macro top in January, which kind of represents the fact that the 4-year cycle is stronger than the macro, in my opinion. Everything that's happening here on Bitcoin is completely normal. There's nothing to be... I'm not going to say there's nothing to be overly concerned about, but the fact of the matter is there's no reason to change from the historical trading methods you should be using, okay? Yes, the 200-week SMA has been lost. That is because the 200-week SMA, based on diminished returns, cannot be sustained forever. It is not something that could have been sustained forever. It would have been mathematically impossible, recession or not. Yes, that 10-year trend line stemming from 2011 had been lost. But again, that is a trend line diagonal on the logarithmic chart. Logarithmic chart trend lines have to be lost eventually as per diminished returns. They can't keep up. Eventually it gets to a point in which you cannot logically keep up with them because it reaches like 10 million by 2025. Okay? Third thing, what can we say here? All of the traditional metrics for Bitcoin, Pi cycle, go to CBBI, type up the website, cbbi.com, Colin Talks Crypto, Bitcoin Bull Runner Index.com, right? That says that all of the traditional metrics for Bitcoin are predicting that the 17.6k level was kind of almost the bottom. Maybe we go a little bit lower. That's basically what they're saying. And guess what? This is a rounding bottom, just like what we've seen before in previous bull markets. The structure is the same. The dates are the same. Everything's the same other than things that would have always had to become invalidated at some point that aren't invalidated by recession, but people are using the recession as a logic for their invalidation, which of course is incorrect. Trust the charts, don't trust the people, okay? People lie, people are wrong, people speculate. I'm a person as well, but I'm trusting the charts. The charts tell us that nothing has happened in this bear market so far that is not to be expected. If you were to go back in time 2 years ago, and you were to look at what the price action looked like right now, there would be no reason to believe that there would be this massive recession and all this inflation and all this stuff going on, because this chart, I'll tell you right now, looks perfectly normal as per the historical trend. Trust charts, not people. Thanks for watching, guys. Hope you enjoyed. Catch you in the next one. Cheers.